All right, good morning, trade pros. Welcome to our morning market update for Friday, January 11th of 2019. We made it. We made it through the week. Not that I doubted we wouldn't, but here it is. It's the end of the week so far, and we're heading into the weekend, last day of the week for the markets, and we're gonna get some volatility, I believe, today. And we may not. So there's two very stark and different realities. We're going to see which one we choose to live in today's market. We're going to keep it a little bit more brief today. And I want to start out while I have you all here with a reminder and an update. This Sunday at 3 p.m. Eastern. So if you've noticed, we update YouTube videos on Saturday and Sunday at 3 p.m. And they're not just morning market updates. They're content that's good for longer. It stays fresh. And on Sunday at 3 p.m., we're going to take a Q&A. We're going to try something new. We're going to do a Q&A with you. So in order for this to work and for it to continue, I'd greatly appreciate it if you guys head on over to the link in the description and see the Q&A session and participate in it. I know I'm open, I'm transparent, and I'm nice, and I can answer all your questions that you might have. Any kind of questions, trading related, and hell, if they're not trading related but good, I'll dabble. Head on over to that link, put them into the comment box on the right side, and I'll take those questions. But first, I'll open it up to the live members that are there. So if you're there live, you have an opportunity to ask me any question you'd like, and I'll answer it for you in real time. So it's going to be really fun. That's our segment called Ask a Trader Live Q&A session. And that's at 3 p.m. Eastern time on Sunday. It'd be great if you could be there live. And if you want your question answered and you can't make it, please pop it in the comment box on that video by clicking the link in the description below. All right. That important update out of the way. Let's take a quick little run around the markets through the world. Japan's up 1%, Hong Kong's up 0.6, China's up 0.7, and India down 0.3%. So markets in the Asian session finished off the week on green. In Europe, a midday, London's down 0.1, Paris down 0.4, Frankfurt's down 0.3%. So small dips, but we're seeing a little bit of a give back from the last couple of days in the strong upward sentiment. In the United States, Dow's flat, S&P's down 0.1, Nasdaq's down 0.2%. For all intents and purposes, pretty much flat as well on the U.S. equities. We are seeing a slight give back also here in the U.S. session, and we've gone up a lot. We've before the holidays, like going into Christmas Eve. Hang on. They are saying they expect to be able to provide about 2,700 positions. Which I'm talking about. Before Christmas, on Christmas Eve, I can't let them talk. All right. Before Christmas, on Christmas Eve, we had a huge market crash, and then since then we've had a huge market recovery. So we're seeing some resistance levels overhead, and we're approaching levels at which the long trade is getting exhausted, and that's between 2,600 to 2,630. All right. Crude oil is up 0.6%. Gold prices are up slightly. Bitcoin's down 4% today, trading 36.18. Bitcoin's getting hit pretty hard once again. The pressure's on. And this morning we had one of the most important news events all week. Typically, if you're wondering, hey, why is the economic calendar so slow? I'll tell you why in a moment. But at 8:30 in the morning, we saw the December CPI metric, which is basically a measure of inflation, used by the Federal Reserve. They follow this exact same release as closely as we do. It came out at minus 0.1% versus minus 0.1 expected. Food and energy came out the exact same, and it's all in line with expectation, which is very timely because it's exactly what the market needs to receive right now in order for the Federal Reserve to continue their strategy. Because if we saw an increase of inflation, then the Fed would say, hey, look, the inflation's going up. Market participants would say, if inflation's edging up, the Fed's got to continue to hike rates even though they don't want to. And we didn't get a chance to do that. So inflation coming in right now exactly as expected, which happens very rarely, very suspect, but that's the number. All right, call it what you will. The energy index fell 3.5% in December, and another 2.2% in November. Obviously, that's when oil was trading towards the lows and selling off rapidly. And it's interesting to see what the month of January looks like and how it ends, because the CPI, or the inflation, could be higher because of energy prices this month. So that low inflation is temporary. It will be interesting to see what comes out in February rather, for the month of January. 1 p.m. we have the Baker Hughes rig count. 2 p.m. we have a Treasury budget. All other economic events are canceled because of this one reason. The government shutdown is entering its 21st day, and it's tying the record from the last government shutdown that was the longest on record. As of tomorrow morning, or at 12 a.m. tonight, This officially becomes the longest government shutdown in the history of the United States, and it spans 3 full weeks. All right, 3 full weeks is a lot. It's enough that you've missed one paycheck if you're a furloughed worker, and you're going to miss another one pretty soon. All right, so it's going to start to put some pressure on, unfortunately, the government employees, the ones that don't have a say in it, pretty much. All right, so it ties the longest record in the U.S. Donald Trump has said that he has the absolute right to declare an emergency and to start taking some of that funds funneling out of other projects, putting it to building his wall. He's been told that by Kellyanne Conway herself, said it's probably not a good idea to do that. But the other alternative tends to be to continue to shut down, to have it for longer periods of time. And the United States is at risk of losing its AAA rating for its debt by Fitch. So if you think about that, it's starting to make a real difference here. It's sort of like, nobody cares about it because, and we started out this way too. I'm like, I don't really care about government shutdown. They last a couple of days and they come back until they don't. All right, and so that's where I think next week is going to start to impact the market more. Up until now, it hasn't really mattered, but now it's front and center. All right, so that's what we got on there. Yesterday, we had a slew of Fed speakers. Can't really tell you what every one of them said. It'll take 4 hours to do that alone. They talk a lot. Jerome Powell, though, said that an extended shutdown in the government could make it harder to gauge the economy. For example, the Commerce Department has stopped releasing a lot of economic data, which is why the calendars are quieter these days. And it makes it more difficult for Fed officials to assess data. Remember, the Fed said they're looking at real-time data. They're a little more data dependent than they were. They went from being super hawkish to dovish to data dependent now. And if they're not getting data, they can't make any adjustments. They're not seeing the latest in how their policy is affecting markets. So they're kind of flying with the radar off in the dark with their eyes closed. That's the Fed. That's what he said. In another statement from the Federal Reserve yesterday, he said that Jerome Powell said that interest rates, he would be patient about interest rate hikes, but would continue to seek a substantially smaller balance sheet, right? Meaning that they're going to continue to sell the assets, the bonds and mortgage-backed securities that they own. They're going to continue to unwind that balance sheet, and they're going to keep rates at a pause. Now, on the surface, this sounds great. He's going to be more patient about rates, which he's now formally admitting that he's not going to hike as rapidly as he had intended. And the problem is this: the balance sheet unwind is the greater component that's putting stress on the economy and the markets. People don't realize that. They go around, they go interest rates up, this and that. Nobody can borrow at the interest rate that the Federal Reserve is giving other than a bank. If you want to form a bank, then yeah, you can get access to the FFR, the federal funds rate. As a consumer, you ain't getting that. You're getting a marked up version because the bank's got to make its NIM so it can eat. All right, and it likes to eat a lot. So what I'm saying with this is that the real impact on the market and the economy is the balance sheet unwind. And professional traders at their desks, I guarantee you heard that statement yesterday. I said, wait a minute, he's right. The balance sheet's going to continue. And if you look at statements in the past 4 to 6 weeks, yes, they've moved on interest rates, but the bigger, more important thing has been that balance sheet unwind and the progress of it. And it's going to continue. So what I'm going to say is this past couple of weeks has been great. I personally hope that I'm wrong, but I see the market turning at this level and starting to look for some more downside. And then on the downside, we're going to be met with some buying. And the question is, will that buying be enough to hold off the sellers? And at that point, we could count the market capitulated and rally back to the upside. So far, though, January started really strong. It's a strong start to January, and strong starts to January tend to dictate the rest of the year, especially in pre-presidential election years. So that would mean that we're having a bullish year. However, there's a lot of headwinds, and these kind of reports could be wrong. Just because 49 of the last 50 times it hasn't happened, or we haven't gotten a bull market, doesn't mean that we're going to get it again this year. It's very important that you realize that. Know that information, but don't live and die by it, because there's a good chance, you're going to die at some point. So you guys have a great day. Have a great weekend. We hope to see you at our live Q&A session on Sunday at 3 p.m. Eastern time. And if you guys have any questions, pop them in there now if you can't make it. If you can make it, I'll answer your questions live. Really excited for you guys and talk to you on Sunday. Have a great weekend. All the best. Stay out of big trouble, but get into a little bit. That's it for me. Vic, anything else? Victoria says a little bit of trouble is always fun. Marky said, let's get it done, kids. That's the advice that we got for you. Donna, post your advice in the the questions box. We appreciate you guys. Have a good weekend, you and your family. See you on Monday and on Sunday. Ciao. Got to spin around, little spinaroo. All right, trade pros. Let's get in here and kill it. We're seeing some movements in the market. Oil is definitely seeing the most amount of movement at the moment, and that's a market I'm probably looking to step on a little bit more today. We're down off the overnight highs of 53.31, down to 51.75. We're seeing a hit there. I'll talk about equities, give you guys some levels, the next best trade ideas, and what we're looking for in today's environment. Then we'll open up the room and track these trades and qualify them live. So let's get started and jump into it.